Welcome to Friday Takeaway. On the menu we have Bermaz and Nestle, but first we look at US President Donald Trump, who has blocked Broadcom's $117 billion hostile bid for Qualcomm. Now this reflects American concerns about an intensifying trade war that China has with America. America says Broadcom's bid could stymie R&D at Qualcomm, thereby weakening the Americans. Dropbox, once the most highly valued tech unicorn, is heading for an IPO. Valued at between $7 and $7.9 billion, it is well below the $10 billion last funding round in 2014, which indicates an overheated private funding market for tech companies. And of course, bad news for other down round IPOs like Square, Cloudera and Box. Retail Group Malaysia reckons the local retail sector will grow 4.7% this year to $104.4 billion ringgit. But it's a forecast that the Malaysia Retail Association considers optimistic, since prospects remain dependent on economic performance and consumer confidence levels, plus of course the wait-and-see attitude because of the upcoming general elections. On to the FBM KLCI. Now as at 10 am, the index was up 0.1% to 1,847 points, barely changed from last Friday's closing of 1844. But year to date though, the KLCI is still up 2.6%. Now in this week's This or That, it's all about consumer stocks, which are all the rage in today's volatile world, being the safe havens that they are. So we're taking a look at two examples and their pros and cons. On one side is a new kid on the block, Bermaz Auto, only listed in 2013 but sizzling right now because of strong sales of its Mazda cars. On the other side, the ageless stalwart Nestle, purveyors of long-time favourites like Milo, Maggi Mee and Nescafe to Malaysians since time immemorial. So let's dig deeper. Bermaz sells Mazda cars in Malaysia and the Philippines, and as well as owning a 29% stake, associate stake mind you, in the contract assembler for Hyundai, BMW and Mazda Intercom. Bermaz just announced Q3 earnings that were the strongest in 6 quarters, and sales are expected to stay strong thanks to recent launches like the CX-5 and the CX-9, as well as upcoming launches like the CX-8, the Mazda 2, the Mazda 6 and the Mazda CX-3 facelifts. Now today their shares are up by 1.8% to 2 ringgit at 30 cents, and still up by a nice 20% in the last week, as well as a nice 1-year return of 15%. Well, consumer sentiment is still weak, and that can only mean fewer new cars sold. Plus, banks are still keeping a tight grip on lending, while high production costs could still eat into profits. Now, Alliance DBS Research has upgraded Bermaz to a buy with a higher target price of 2.44 ringgit, while CGS CIMB maintains a hold call, also with a higher target price of 2.14 ringgit. Now, Nestle are a super big cap that makes and sells some of Malaysia's best-known foodstuffs, including Milo, Maggi Mee and Nescafe. They've been a major beneficiary of government cash handouts like BRIM, the stronger ringgit as well as lower costs, but they've also been helped by growing consumer confidence given the type of things it sells. Look at it this way, even if the economy tanks, people will still drink Milo. Now today Nestle shares are rebounding, up by 2.5% to 134 ringgit after taking a pummeling this week, losing 12% over Wednesday and Thursday, but they're still up a massive 73% over a 12-month period, which is huge for such a big cap stock. Even after their sell-off, their market cap still a gargantuan 31.5 billion ringgit. Well, they've surged so far in the last 12 months that analysts say it's time to sell the stock. Affin Pang says that while it still likes Nestle for its solid brand name and defensiveness, the 5 to 6% average earnings growth and dividend yield of just 2.3 to 3% is unattractive for such lofty valuations. Affin Pang maintains a sell call on Nestle Malaysia with a target price of just 97.60. However, MIDF Research is neutral with a revised target price of 116 ringgit and 50 cents.